Welcome to the Big Skinny with Lou Basenese coming at you live from Chicago. If you ever saw the movie A River Runs Through It, chicken in the car won't go. That's how you spell Chicago, in case you didn't know how to spell. Hey, we're glad you're joining us here on this Monday afternoon. A lot of trade talks going on, and you're probably wondering if this is your first time. What the heck is this Big Skinny all about? Well, let me tell you. Urban Dictionary defines the Big Skinny as insider information, and we are absolutely not that. After being FINRA licensed too many times, I don't want to end up in an orange jumpsuit behind bars for giving you information we're not allowed to, but we're going to give you the very next best thing, and that's essential truths so that you can see through the headlines and really understand the moves you need to make in these markets to make money and be ahead of Wall Street. It's, you've been told it's not possible. But I'm here to tell you, after 20 plus years in the market, it is possible, and we go about it in a very straightforward way. In fact, some people have called us the SportsCenter of financial news. I'll take it. It's a huge compliment. I like to think of us as the Dave Portnoy of pizza reviews, but for investment news. That's right. Everyone knows Dave, one bite, one bite. Everyone knows the rules. And we're going to take a similar approach here. We're going to give you one headline that you should most oftentimes ignore because it's leading you in the wrong direction. Then we're going to come right behind that with one chart that gives you the data that actually matters. And then we're going to give you one investment insight, what you should be doing in this market to capitalize on the data, not the sentiment. And all along the way, we're going to make this part of a choose your own adventure as well. Before we welcome in a market guest, you can join the conversation, whether you're streaming live on X, on YouTube, on LinkedIn. Please don't be afraid to hit us with your best shot. Investing, wow, that's an original handle there. Investing, you could have come up with a number? I don't know, I'll just give you a hard time. Apple sitting on a huge pile of cash. What's next? It's a great question. I think Apple is going to have to make an AI acquisition, but we'll bring that up. Apple, longtime holder. I'm a forever fanboy. Been buying this thing since a split adjusted price of about 47, 48. So look, Apple goes through phases. We're going to see what they're going to do next. We'll bring it up with our market guest today, who's honestly one of the most impressive analysts that I've seen. It's scary for me to say it, that he's almost half my age. So just a really talented guy that's got great insights on tech. So before we do that, let's get to this week's rundown. All right, if watching Rocky clips doesn't get you fired up, I don't know what does, folks. And here's what gets me fired up. I've been early, and I've been wrong so much about small caps, but I've been waiting for this day because small caps trade in cycles. And this is one headline that I can definitively say they got it right, Bloomberg. So good, so bad it's good. There's a buying window that's opening for battered small caps. Small caps, if you didn't know, have been lagging large caps for 12 years now, right? That doesn't mean they've been negative for 12 years. It just means that they've underperformed for 12 years. And that's not typical. These cycles usually move in 9-year cycles. And if we look at it right now, small caps are much more compelling bargains in this current market. There's a lot of uncertainty involving the economic backdrop that adversely impacts small caps more so, but that is coming to an end. We're getting clarity today. You have representatives from both China and the U.S. meeting to sort out this trade war and tariff battle. You're getting a big, beautiful bill or an abomination. I don't know what camp you fall in, but one way or another, we're going to get that thing passed, and that's going to supercharge the economy in the back half of the year, and that bodes well for small caps. I mean, it doesn't matter how you look at it. If you look at small cap performance in June, seasonally, it's been the best performance month for small caps, so forget that sell in May and go away mantra. It's not true for small caps. The setup, though, is historic, much longer term. If we look at short interest right now, it's as a percentage of the Russell 2000 spiking. So we got a lot of people betting against small caps. And you know me, I love to be a contrarian when everyone thinks alike. In the words of Humphrey Neal, everyone is likely to be wrong. And I think they're going to be wrong about small caps again. And look, if I had to boil it down to one stat, you know what it's going to be. It's going to be about earnings. If we look at earnings growth in the last year, the S&P 500 delivered earnings growth of about 11%. Heading into this year, for this current year, we're looking at potentially a 9% gain in earnings for this year, year over year. Small caps, just crapped the bed last year, only delivering earnings growth of about 2%. But this year, we're looking for the Russell 2000 of 33% growth. So if stock prices ultimately follow earnings, and they do, we know that over time, small caps are poised to rally again. So small caps, mount up, cue up the Warren G. Regulators, here we come. It's going to be a small cap rally. I believe it starts heading into the July 4th holiday. We're already seeing outperformance. From an investment angle, what does that mean? Look, well, a lot of small cap names are popping off their charts right now. We've mentioned some of them. We've got a few more here in our AI pick list. But if nothing else, allocate some fresh capital to the ETF, the IWM for small caps. The Russell 2000 is going to make a breakout. We're getting near 2-year highs, and it's overdue for another major rally against large caps. So that's what we got for small caps. It's a small cap comeback. Bet on it. I'm betting on it. You should too. What about the Fed? Right, this week, I think Fed Chair Powell could be in a pickle. Reuters reporting that the Fed should cut interest rates by a full point, according to President Trump. That's right, a full point, not 25 basis points, 100 basis points. His rationale is, everyone else is cutting, right? The Eurozone's cutting. But here's the thing. Don't just believe the rate cut calls from the president just because he's the president. The reality is the Fed is in a wait and see moment. In fact, if you look at other headlines, the Fed has actually been adamant that Fed officials are saying probably September is the most near term cut that we're going to get. I would argue might not even come in September at all. And here's what's going to be the tell this month. It's going to be the data. This week we get CPI. CPI is expected in May because of the impact of tariffs to uptick about 0.3%. That's going to be a reacceleration, and that's going to keep the Fed on pause. Jerome Powell being adamant about it, that, look, we're going to stay on pause until the data warrants it. Now, what about all those prognostications coming out? The Fed Watch tool, if any of you use it, I think it's great to see just changing sentiment, how quickly it moves. Just Google Fed Watch tool. You'll see the probabilities based around every Fed meeting. It moves on a dime, the futures trading based upon specific comments. Don't obsess about that, because as you saw in the previous chart, the forecasting based upon futures trading and Fed futures is notoriously terrible. As bad as the local weatherman here. Look at all these squiggly lines. What you got to follow is the more solid dark line. That's the actual Fed fund rate over time. The squiggly lines coming off of it are all those wonderful prognostications for Fed fund futures trading. They should, if they were accurate, be highly correlated and match up much more than they do, and they just don't. Nowhere close. So what does this mean? From an investment standpoint, honestly, you got to pay attention to the print Wednesday CPI to see if Powell's in a pickle. We then look at what the bond market does. I think investors are conditioned to not expect any rate cuts now, finally, until September. I think as long as the trade headlines are moving in a positive direction, we can get a little bit and tolerate a little bit higher inflation, and the market should be moving along just fine back to new highs. So we'll see if Powell's in a pickle. That's what's coming on Wednesday. Don't be a fool and fool around with that Fed tool too much. It could lead you in the wrong direction. Now, last but not least in the rundown, I want to cover a topic we've been talking about for weeks, and frankly, I'm going to argue we're going to be talking about it for years, folks, because it's AI. This is a trend that's not going to end, despite the headlines proclaiming otherwise. From Barron's, this one, there's plenty of others. The dot-com bubble, it burst 25 years ago. AI could be next, not anytime soon. I'm sorry. We've ushered in the data here week in and week out, whether it is the spending, the capital expenditure plans for Meta, Amazon, Alphabet, and Microsoft spending over $300 billion collectively. In the case of Meta, it's more than their trailing 12 months profits. That's $72 billion that they're going to invest in CapEx for mostly AI. That is more than just words. That's action and capital being deployed. We've shown you as well that AI has nowhere near evolved as much as it needs to. If you look at the humanity's last exam, which is the hardest gauge, the hardest test for AI to pass, we're at best at an 8% passage rate. Now, you look at all the other performance metrics and benchmarks, you know that AI is at 70, 80, 90%, leading to all of this fear-mongering in the headlines that we're all going to be replaced by AI bots overnight. It's just not happening. AI has a long way to go. We're early in the cycle. If you're a baseball fan, I think we're maybe in the bottom of the first. So AI all night long. Let's cue up a little Lionel Richie. Why am I so convinced of this? Well, the latest data point, and here coming, looking at GDP in the last quarter, Q1, and the contribution of direct investment in IT equipment. So non-residential fixed equipment, if you want to wonk out and get into the specifics of it, here's all you need to know. It was accounted for 1% of GDP growth, a full percentage point of growth. Folks, this is not just about words and 40% plus companies talking about AI on earnings call. This is real money, real capital being deployed for solutions that are going to change the world as we know it. And we're going to get into that. In fact, I'm going to welcome in our guests after a quick commercial break. We're going to talk about all things AI and give you 2 more AI picks that aren't named Nvidia. But before we do that, make sure you're signed up for our newsletter, thebigskinny.com, or scan the QR code on your screen. Again, thebigskinny.com, or just scan that QR code when you get a chance. We'll be right back. Do you believe everyone deserves access to quality health care regardless of their financial situation? Well, at the Roberto Clemente Health Clinic, we make that a reality. And I say we because I'm on the board of directors, proudly to one of the nonprofit organizations that I lend my money and time and talents to help because it's a worthy cause. If you didn't know, we're a US-based 501c3 nonprofit dedicated to providing affordable, compassionate medical care to the 30,000 people in the Tola coastal communities of Nicaragua, which happens to be the second poorest country in the Western Hemisphere. So many people might know of Nicaragua and this area and this region because of its great surf. It's also got great poverty, and for no good reason. So as a member of the board of directors, I've seen firsthand the impact that this clinic has on the lives, providing a full spectrum of care that we take for granted here: primary care, pediatric care, urgent care, and just wellness education and services. Please understand that all donations directly support this mission, allowing us to continue offering these vital services. So please consider making a difference today. I know you have a lot of places and causes that deserve your time and attention. But if you're interested in learning more, scan the QR code on the screen or visit nicaclinic.org to learn more and consider making a contribution. Together, we can build a healthier, stronger community. We'll be right back.
News contributor and former economic advisor to President Obama, and Lou Basenese, executive vice president of marketing strategy at Prairie Operating Company. Welcome to both of you.
You haven't spoken with Musk yet, right?
We're currently playing phone tag. I just want to answer any questions Elon has and make sure he fully understands this is not a spending bill, it's a budget reconciliation bill, and we're achieving the largest tax cuts in history, the largest savings in history, and real reforms to the programs that people rely on.
Because, of course, Lou, the Republicans who do support this are touting the growth they believe will come from it.
Yeah, and I think there will be. But, I mean, I grew up with a mom that watched daytime soap operas. Who needs that drama when you got this going on with the world's most powerful man and the world's richest man? But I think both of them have a point, right? We need to extend the tax cuts, make them permanent to spur on economic growth. But at the same time, if anyone knows how much could be cut from the government now, it's Elon Musk. I mean, he had the best perspective to look under the hood and see how much fraud and abuse that there is. I think you're going to see more cuts come as a result of this. Now, obviously, you know, former House Speaker Newt Gingrich was saying that Elon just doesn't understand how Washington works. He doesn't, but he has a point. And America wants to see the cuts too, because that deficit, CBO estimates are notoriously too conservative. If you look going back over the decades, they always underestimate the growth in the deficit. So 2.4 trillion, it's probably closer to 4 if we pass it as is.
Right, Lou, I'll finish off with you. Senator Kennedy says maybe Musk's got a point. He's essentially saying that we've turned into debt slaves. So there are Republicans who are taking that viewpoint. I'll finish with this. Does it get through? What does it look like?
It absolutely gets through. The president sent an ultimatum that if this doesn't pass, we're in far worse economic shape. You pass on a 60% tax increase, that's going to send the economy into a death spiral. I mean, you just can't have it. So president being firm and adamant, we got to pass it. It's going to look a little bit different. I bet there's more cuts, but we're going to get this through.
Appreciate the discussion, gentlemen. Thank you very much.
Thank you.
All right.
Thank you.
Welcome back to the Big Skinny with Lou Basenese. I'm still Lou Basenese. Appreciate everyone tuning in and want to remind you, join the conversation because this is where things can get interesting. You can choose your own adventure here. Don't be shy about sharing comments, whatever platform you're watching on. Punch them into the chat function. We'll bring them up on screen. Look, you can have biting criticism, stock picks for us to look at, thoughts on Apple, Mag 7, anything you can think of. Don't be afraid to join the conversation. And we're going to turn this into a conversation right now. I'm going to bring in our guest, our market guest. And I mean this. I sent out an email about 30 minutes before we went live. This is one of the most, and to be candid, is the most impressive younger guy that I've seen in the markets, and don't let age. Just don't let age let you discriminate against him. Shy, I want to welcome you to the show, man. I got to give you credit, dude. You speak and put out content. One, it's prolific, and two, the detail and depth shows how much you know at a ripe young age of 31 years old, man. Glad to have you here.
I appreciate you having me, Lou, and thanks for the kind words. I mean, I in my early 20s, like I read the book Outliers by Malcolm Gladwell. If you guys haven't read that, you've
Great
got
book.
to write it. It's gonna change your life. I was like, why can't I'm 22 years old, 23 years old. Like, why if I put the 10,000 hours in today, by the time I'm 30, I can
Yeah.
maybe stay in the same room as these people who've been doing for decades. And that's what motivated me, and really why when I talk to a lot of people who are experts in AI or in technology or in stocks, like they are somewhat, like you said, are surprised with my age of being only 31 years old.
Yeah, look, don't let that hold you back. I was 26. I started doing public speaking and had the worst performance ever. A guy in the front row was like, "Hey, Sonny, when are you going to get to the stock picks?" and booed me off stage. So, man, putting in the work matters. And I got to tell you, honestly, going through, I was going to ask you this because people probably ask you, like, well, you're so tech savvy. Are you just using AI to do your research? I'm looking at it and I'm saying, this guy's reading going as far as reading all the SEC filings, is interviewing CEOs. Like, you're doing all the roll up your sleeves work. Am I wrong in suggesting that?
No, you're absolutely right. I mean, my background was in corporate strategy, so I worked at a lot of Fortune 500 companies in healthcare, tech, and entertainment. So my job was essentially digesting data from our scientists. They provided to me, and it was up to me to create a narrative to communicate to C-suite. Because they're just so busy and they have no interest in doing that
Right.
legwork. I don't blame them, but essentially, I fed it on a silver platter on what's happening in their organization. So I feel like I learned a lot of skill sets during my time. Like, I sound like I've been doing this for decades. Like in those 5 years, I was in corporate strategy, but I was able to communicate what was noise, what was the actual signal. And I think that
Yep.
this being able to decipher what is noise, which is unfortunately 90% of everything what everyone reads, and what the 10% signal
Amen.
is, that's all that matters. And if you can create a narrative that makes sense of that's more future looking than backwards looking, it will make the biggest difference on how you communicate with people who are actual stakeholders in what be these whales in these disruptive industries that I research. I'm able to have these organic conversations with, because I know what's BS and what's not, and I can
Yeah.
essentially not waste their time with giving me just 10 minutes of their time.
Yeah, no, look, I think I love the approach. I mean, I cut my teeth a little bit a few decades earlier than you, but similar is like, hey, if you can communicate, I was an English major and pre-med before I got into finance and got my
Whoa.
MBA and went investment banking. So I'm like the poster child for unexpected, right? So, in fact, I got thrown out of school, but we'll save that for another story for another day. But here, you put your finger, and I think you have conviction about AI being the fourth industrial revolution. So share with us what's led you to that just unashamedly strong and bold position. I know you got the data to back it up. So for you, high level, someone new is like, how could you say something so big and grandiose about it?
Yeah, I mean, I was anecdotal evidence. I was in my director of corporate strategy role, and I was Chat GPT moment happened. I was like, this is going to replace my job. This is not just like the dot-com era or even the cloud era or the 3D printing era, which some people actually said AI was going to become, which is so wild to me that people were actually phrasing it that way. But I was like, this is disruptive, because I've been an investor my whole life. My father just never believed in W2. I ignored him. I went that route. But I saw every revolution before this AI revolution, there was a specific characteristic that this one did not have. And that was, all previous revolutions were a product. This is more of a characteristic. It's intelligence. And
I
that's what
love
makes
that.
it so applicable across every industry, across the whole world TAM. And I was like, this is revolutionary. I know every time, every 10 years, there's some kind of tech revolution. And I was like, this is different. And I went all
Yeah.
in on it. And the reason
No, look, I think it's an enabler, right? I mean, your point is it's not a product, it's an actual enablement for all the tech that's out there, right? So like the 5G was.
Absolutely. And I think that it's still healthy to compare historical revolutions, because history doesn't rhyme, doesn't repeat itself, but it often rhymes. And if you want to just go back to the dot-com era, which I think is the closest revolution to what we're experiencing today, even though it's slightly different, I think a lot of the intention was fixated on the infrastructure phase. So
Yep.
laying down the groundwork for connectivity. So think Cisco, IBM, AT&T, Verizon. Like these were major companies spearheading the digital awakening that society wasn't ready for. So they're building the cables, the hubs, the structural arteries of the internet. Essential work, but they weren't the crown jewels of that era. You know what the crown
Right.
jewels were? It was the online marketplaces that are built on top of the structural arteries, the Amazons, the
Yeah.
Googles. So even though I didn't participate in Nvidia pre 2023, people might have assumed I was late. I was like, no, I think I've studied during those 10,000 hours I was doing in the lab researching. I did a lot of historical revolutions on what was happening then. I was like, Google got created 9 years after the internet got created. Like it's really, there's some real opportunities if you miss that first wave. And I was like, I think this initial wave you saw through Nvidia, it was GPUs, the compute system, the hardware firms. They were again becoming the backbone of the laying down the groundwork for AI's meteoric rise, but they weren't going to be the crown jewels. And I was like, I think Palantir is going to be the crown jewel. So I went hard on Palantir.
It's a great pick. I mean, look, the analogy extends too. If we look at like the 5G boom, right? The network providers didn't have the huge way. I mean, they had, the carriers started to get it, but then if you look really, who did the best, right? You moved into Avago before it acquired Broadcom, like the RF front end and smartphones, and then you had Netflix that was providing the content over the better infrastructure. So I think to your point, you can miss some of the first waves of profits. Now you're looking at second wave. So Palantir is a name you love. I know we brought it up. It's on my list of 10 that we're starting to reveal is Astera Labs. Why don't you share your case on Astera? Because I think it was a recent IPO, March of last year. Most people don't start picking up new IPOs because they just feel like it's a fool's errand. They're not going to make the money. But this is a quick growth. In your words, what do you see the opportunity with Astera?
So again, when I give my pitch on Astera Labs, Astera's rise doesn't mean it's a diminish. It means the diminishing phase of what Broadcom is. Like Broadcom's still the king of networking. Let's just not confuse that. But I do believe that Astera Labs is solving AI's biggest problem, which we got some insights just 2 weeks ago on the networking revenue that through Nvidia's earnings. That was the hidden gem of that print. It was their networking side of the business came in at $5 billion. Estimates were like around 3.5 billion. That's because of one word: inference. Inference is here to change so much of the semiconductor ecosystem. And the way I like to phrase what inference is, because a lot of people just hear that word for the first time, which again, I don't blame you. Like, how often do you hear inference in your day-to-day life? Like rare. But I think
my wife makes a lot of inferences off my words, and so I got to be careful. She's very sharp. She figures out where I'm going next. So
I mean, yeah. So I do think that like inference is like, it's kind of AI. It's in correlation with AI agents. So I'm a pretty big believer that agentic AI is a near-term reality, not a far sci-fi dream. Every single company out there are going to be talking about AI agents, AI agents. That's the next derivative right now. So if you think about when I mentioned AI's intelligence, that's why the scalability is massive. Inference is the tax on intelligence. So if intelligence is going to be spreading everywhere, inference is how you're going to make a lot of that money on the tax of it. Think of it as Uncle Sam of AI, where it's not the cost of deploying all the models, which everyone thinks about AI, LLMs, modeling, but it's kind of the cost of using them. So as usage scales, the tax scales with it. So when my partner Daniel Newman, I think you had on your show last week.
Yeah, he was here last week.
Yeah. So when at Futurum we were talking about when the DeepSeek revolution got created. I don't know when that was. All the FUD on all these semiconductor tech names, it just caused all these names to just go down 20, 30, 40%.
Yeah, it was wild.
I felt like I was losing my mind a bit though, because I was like, this doesn't make sense. Training data might become cheaper, but the inference demand, again, the cost of using all the training data is going to be going through the roof. And I was like, that's going to be a massive tailwind. And the metaphor I love to use was, if AI was gas and gas just became cheaper, do you think there's going to be less cars being sold on the road? No.
Yeah, no, there's going to be more. Yeah, the demand is going to go higher. Yeah,
Way higher. No, people are going to, it's crazy.
It's the same thing. I mean, it's like if we had, I mean, talking with some industry insiders, SMRs for, provide nuclear power to, to power the next gen of AI are probably 2032 is the over under when they come online, like meaningfully. But think about if we had SMRs right now, like tomorrow we could flip a switch, AI demand would continue to, it would accelerate even more because now you're clearing the bottleneck. So you're saying this interconnectivity, the inference abilities is going to be, I mean, is really the next leading edge that powers the next iterations of AI and the next applications of it.
Exactly. I mean, it was probably my long-winded answer getting back to Astera Labs, why it's probably one of my favorite plays right now in the market, is because like the market is still pricing AI like it's just about software or models like LLM, SaaS, chatbots. But that's kind of last cycle's trade. Like the real money is going to be made in inference or the companies that enable AI to scale past its current limitation. So think about it as AI workloads are going to become they're going to increase and increase because training demand is going to go cheaper. These AI workloads are going to soon be bottlenecked by bandwidth, latency, and data movement inefficiencies. So that explosion AI model we're seeing right now is going to create a lot more complexity in the way we move data between all these resources at speeds that could keep up with real-time inference, but it's going to be really difficult. And that's where Astera Labs comes in because they're positioned to that high-speed interconnect solution that AI infrastructure needs. And although they're kind of eating some of Nvidia's lunch with their solution, their Scorpion solution, like I do believe that Nvidia partnering up with them just 2 weeks ago shows that they have a real solution towards the AI bottleneck issue that I think that the market's kind of missing out on because they're not worried about how fast data is going to need to move between the GPUs and memory and storage. And Astera Labs solves that bottleneck by providing that connectivity layer that really isn't being priced in effectively right now.
No, there's a company that was earlier, founded a long time ago, MTSI, that was really focused on more the fiber and the optics and the optic transmissions and that interconnectivity. So they leveraged, 14,000 patents over 3 decades to kind of move into that. And data center is one of their biggest growth centers because that interconnect, like you said, no one thinks beyond the GPU compute power, right? And then there's the storage, but then how are you moving that data back and forth? And then, obviously these systems become more complicated and you have to have a software overlay that Astera has to integrate all these things. So yeah, I'm totally with you on Astera. So when you tweeted at me, I can't, I mean, I always say tweet. I can't unwind that. I'm an old dog, man. You X'd at me. Hey, what about Astera Labs is on the list? It's absolutely on the list. We got about 1,500 people listening live. I don't know if they have any questions, but don't be afraid to chime in. We're going to talk about a lot more tech topics as well, not just AI and interconnectivity and inference. I got one for you because I wasn't a believer, still not a full-fledged believer, but you got people out there now talking about Bitcoin going to 3 million. Where does Bitcoin fit into your whole AI tech kind of revolution that's happening in the markets and investing?
I mean, the failure of Doge, essentially. I think just the BBB, the big beautiful bill, I think that is just such a tailwind for Bitcoin because, again, this debt issue that we're experiencing for who knows how long before I was even born, it's not going away anytime soon. It's actually going to probably get worse if the BBB gets pushed through. And you hear Elon's frustration, like this junior high yelling match that we had with Elon and Trump just a couple days ago.
Yeah.
Like,
it was a midday soap opera, man. I don't know.
It was a midday soap.
My mom, General Hospital, right? Jason and I can't remember the guy. They were getting into it, man. It was silly. I mean, these are grown men, and here we are arguing.
Crazy. It's just POTUS and the richest guy in the world arguing in front of everyone. It was wild and it was entertaining, but I'm a Tesla shareholder. So I was like, I'm paying for this entertainment essentially right now because it was just dipping. But either way, I mean, I think Elon's frustration is very valid. Like he spent 6 months of his life. Again, 6 months. Everyone thinks boohoo, every Joe Jane, like whatever. 6 months. I've wasted way longer doing stuff. For Elon, Starlink, SpaceX, Tesla, he's the leader of multiple super cycles for the world right now. And he put that all on the side to commit to 6 months towards Doge. And then one policy change, BBB, unwinded all of that. Of course he's going to be tilted. Of course.
Yeah.
So
I think absolutely I agree with that. I think a part of it is they both understand the circus and the show that they can create by going at each other in a public forum, which just helps them both. So yeah, I agree. Long term, it leads to more debt, more, that's positive for Bitcoin. I mean, is this something you have an allocation to? Like, are you a crypto, like early stage? Do you look at just the pure cryptos, or you look at applications of crypto that's interesting to you?
So I'm ashamed to say I'm a late adopter of crypto. I'm not even that big. It's 1% of my
Same.
portfolio. So I think I don't know if it's like that for you, Lou, but for me, I was like, for me to believe in a concept, I really have to see numbers kind of back it up. I need a fundamental floor. It can't
Yes.
just be on like a thesis, which I believe. I believe in crypto, but it's hard for me. Like if it goes down 60%, will I add more? And I couldn't
Right.
because I need that fundamental floor to add more. So I think a lot of investors need to ask themselves, like, if you're investing in a stock or an asset and it takes a 50% haircut, especially a risk on one, will you add then? If the answer is no, then maybe this is not the right lane for you. And for me, crypto at that time isn't that.
Yeah.
Isn't
No, I'm
really
in the
that.
same. I'm in the same camp. I still struggle to like put a value to it where I can objectively say if it falls this much or rises this much, here's how I would respond with my capital. So, yeah, I'm a late adopter, maybe a little bit of a luddite in areas that I'm usually like the first early adopter. Want to talk to you just about market cap, right? Like we're talking Astera Labs, 13, $15 billion market cap, roughly. Nvidia 3 trillion plus. Like, where's the sweet spot for you that you've learned in your 10,000 hours where you can find these opportunities and ride them? I have particular ranges I see in the small and micro cap space, but I'm just curious, like, where you look for new opportunities. What's like the fat pitch down the middle that you love to swing at?
That's a great question, Liz. So I think a lot of people are surprised that I don't own Nvidia, Google, Meta, etc. I'm not, because I don't own it doesn't mean I don't think they're incredible companies. They're disruptors, leaders of a lot of secular growth themes. But as a growth investor, I think for my taste, it's better to find early disruptors in industries that are undergoing structural shifts that take years to play out, because I do have time on my side and I don't have that many responsibilities in my life right now at 31 with no kids and like a lot.
You young man, you young man. It'll change. It'll change
Right,
quick.
it's
Use it
going
wisely.
exactly. But, like, I feel like I have that risk appetite where I can take those risks and those chances. Find the Palantirs, the Rocket Labs, IonQs, these
Yep.
really interesting technology, IP, moat companies that are being mispriced by the market due to valuing them on today's traditional metrics rather than what the market's going to turn into. I want my soldiers to go towards that while having one, maybe two of those amazing trillion-dollar companies as my bedrock, my
Yeah.
anchor. So Amazon right now is my anchor, my portfolio. Yes, they're a multi-trillion-dollar company, but they have their hands on robotics, uber bullish on robotics. Nobody can match their logistics and e-commerce. And I think robotics, I think the market is violently underestimating the margin expansion opportunity on the e-commerce side of their business through logistics robotics. Violently.
Yeah.
I think it's
Yeah.
mispriced.
No, listen, I live in New York and I watch the inefficient. They basically pull a box truck up on the big main streets, and then they like ants descending on food. All these other delivery people unload it and then scatter. If you could automate that, that last mile delivery or less than a mile, like automate it, make it more efficient. There's tremendous expansion opportunity there too. I think their advertising business is grossly underestimated
Oh
as
my God.
well. But
Yeah.
yeah, that's going to be a huge generator for them. It's akin. So Apple is your Amazon. Apple for me is what Amazon is for you. It's the bedrock foundation. For me, it was always services. Like knew they were going to get into mobile payments, and all these services were going to become a bigger and bigger part. And there was a day when everyone complained that iPhone was 70%. Now it's 51% of revenues because services. I think Amazon has that same expansion. One more question. Let's see if we got some comments. But I said the Mag 7 was like a boy band that needs to break up already. Like people are trading it like this monolith, like own them all or own none. If you had to pick one other Mag 7, like which outside of Amazon, what would it be? You
Ooh,
said
great
Tesla,
question.
right? Yeah.
Yeah,
So
it's
would
gotta
you
be
would you toss
Tesla.
Tesla out? Is it because of the robots, driverless cars? Where is it for Tesla? Where do you come down? Because that I could argue on a valuation basis is all based on the future, which could be very big, but the present is declining. So how do you come around that?
I mean, yeah, the present is declining, unfortunately. So I think for Tesla, like the scalability of what Tesla's trying to solve on autonomy is unmatched. And a lot of people believe that Waymo, like that's a clear leader. I'm not disagreeing with anyone who claims that. It's absolutely a reality. I take Waymos weekly in LA. Like it's a very common part of me and my fiance's ride experience.
That sounded like a new drug, by the way. I take Waymos. You almost turned that into a new. Sorry.
No, I mean it's already becoming an adjective. Or a verb. That's the cool thing. But I think that a lot of people need to remind themselves, like you're an Apple. You got into Apple way early. Like BlackBerry was the clear smartphone winner because it had the first mover. Apple was considered like a phone with no buttons. How am I going to type? How am I going to text? There's no way. Right. Decades later, look what happened. I think the scalability of what Tesla's trying to conquer in autonomy is the Apple version of BlackBerry for Waymo. So I think that it's a story stock, and that's what makes it so tricky to own and also to value, because it's a trillion-dollar company with 2% operating margins. That is an idea type stock, story stock. But Elon shoots 100% on what he does. 100%. Could this be his first failure? Maybe, but I won't bet.
No, I agree. Look, I look at, when Jack Dorsey was running Twitter N Square and was like, you can't handle I used to give him criticism because 2-time, and then here Elon comes around and can run 4, 5, 6 companies at a time. So I won't bet. I bet against Tesla one time and made money on the short side and said I'll never bet against Elon again, just because he always finds a way, and he's great at casting a vision of the future, getting people to buy into that story, and even if that vision and timeline slips, he keeps the valuation. So, all right, so you go Tesla, Amazon. I'm Apple, Alphabet, because I think Alphabet has just been woefully just sold off on antitrust rules. I think they're not going to get broken up. I think they have an advantage in just decades of search data. They know more than anything. So those are my two, and it's just a valuation play, right? Like it's gotten most Mag 7 or 25 plus times earnings, forward earnings, and it's in the teens still. So I think we got to cut. What do you think about Alphabet? Yeah,
I love Alphabet. The issue is you can love a stock, but understand that it might take a long time for a narrative to shake that stock. So like that search demise from AI, it's an absolute reality, but I don't think it deserves to be this cheap at the same time. But like when you shake that narrative, it's going to take some time, and that's the tricky thing with being an Alphabet shareholder.
Yeah, no, I agree. I can't disagree with that. I think it's instructive too to always think, what's your bull case, what's the bear case, right? Like what could make your investment go wrong? I think we got a question here on quantum computing. Quantum's going to be a BS scam. Oh, God, Mark and Schreckle, whatever. Currently own IonQ and others, but what do you think about that? I think quantum is next generation. Like we're going to get to it, first wave, second, third wave of AI. Quantum factors in there, but where do you see it? Because some of these quantum stocks have had a huge run early in the phase, which is not atypical. But what's your thoughts?
I will say caveat. I did have I was on the Daily Rip show this morning with Martin, and him and I definitely had a little tussle. It was a really difficult character to have an interaction with. So,
but isn't he the guy that hijacked all the biotechs? Like, am I thinking of the right guy?
No, you're thinking about the felon who misled millions of people. But yeah, him, that same guy, the farmer bro.
Wait, that's who you got in a tiff with?
Yeah. He's just because he thinks quantum's going to go down 95% all the stocks. He thinks it's a dud. He thinks he was doing a lot of trust me, bro energy on the conversation this morning, and it was difficult to interact when he was just throwing slanders and interrupting me. But to answer the question, like quantum is absolutely the next frontier. Like there's going to be a constraint hitting a lot of the AI workloads, not now, maybe not in a couple of years, but eventually there's going to be a constraint issue, especially at the scale we're going at, where, like I said, it's not a product, it's a true characteristic change in the whole world. Intelligence is a characteristic, and that's going to destroy the grid. Like the grid is not prepared for that. So I think that it's very important to be specific of what kind of quantum names to them, because I do think that I agree with Martin's sentiment that a lot of the names will be duds. I think that IonQ won't be.
We saw that though. Like if you look at the 3D printing boom, right? You had 3D printing of organs. You look at any boom bust cycle, there's always winners and losers. There's people that are early. It's characteristic of hype cycles, right? You get that first generation of any technology, things run up in the hype, and then you come down that trough of disillusionment, and it's second and third generation that prove it out. So Man, I tell you, you're young, but you got thick skin in the right way. Don't listen to a convicted felon who's short everything, as Neo On always said. Man, I got pot shot. I used to trade barbs with Citron Research, and Andrew left. And look, the beauty of this is the market is the great arbiter. So to your thesis that there's going to be quantum names that survive and thrive, I think you're going to come out victorious on that. So, and if I had to choose between listening to a really studious, ambitious, accomplished analyst, which I want to talk about in a second, your new venture, versus a guy that's always short and has already been, accused of fraud. Yeah, no thanks. That's not even a question. So,
I appreciate that.
Whatever that means to you, my one vow of support, man. I don't know what that's worth, but hey, tell us about your new venture. Dan, we had Daniel Newman on last week of Futurum Group. You guys just launched your Chief Market Strategist, Futurum Equities. Tell me about what you're doing, and I love your tagline: access, insights, and research. What is that all about?
Yeah, I mean, first off, I gotta give Daniel credit. He came up with that as genius because we provide the air for investors to breathe. Access,
That's
insights,
so good.
research. Beautiful. I love it. And I think it's a testament to Daniel, for example, because he's run Futurum for years and he created a very successful institutional research firm that's very B2B. And he's been doing that for years. And I think there's constantly been this institutional wall on retail. Like for me, it took me years, 10,000 hours just to be able to feel comfortable to open the door to be in the room with all these institutional giants. But for all of retail investors, they don't have that time or luxury of committing themselves to something that's not directly binarily paid in return. So retail's always left reacting instead of predicting, and that's the big difference on why institutions outperform retail. It's not because institutional investors are smarter. They're not. I interact with them constantly. It's because they're closer to the data. They're closer to the decision makers, closer to the truth before it hits the tape, where then investors see it, but by then the move's been already made. So I think that Daniel loved he has a vision. He had a vision that retail, this is the time to just take that wall down and allow retail into the insights that institutions have had for decades. And that's why we created Futurum Equities, where the three pillars of the institutional edge has always been access, insights, research. And now we're creating this platform where we provide everything that all the data and access he's had on the Futurum side with my ability to narrate it towards the retail. That combination is going to be an open source where this research is free. We just want to democratize research. Like Robinhood broke down the democratization of brokerages by creating 0% commission. We do believe that this is the other side of that calculus, access to research. And I think when you have both those together, retail will finally have a chance to compete with the institutional whales.
Yeah, no, listen, man, I'm a firm believer in it. I agree you're onto something. I really want to thank you for your time. Everyone, check out Futurum Equities led by Shay. Man, thanks for coming on the show. Would love to have you again if you got time.
Of course, man. Thank you, Lou, for having me.
All right, man. Have a good day. We'll be right back after another word from one of our sponsors. Attention investors, are you looking for a high growth opportunity in the energy sector? Well, look no further than Prairie Operating Co., trading on the NASDAQ under the ticker PROP. As America's premier high growth, low cost oil producer, Prairie is making waves in the DJ Basin in Colorado. With a recent transformative acquisition, they've expanded their footprint to 55,000 net acres and increased daily production by over 25,000 barrels of oil equivalent. Prairie is poised for strong growth, maintaining a strong balance sheet while delivering value to shareholders. Don't miss out on this exciting investment opportunity. Prairie Operating Co., PROP on NASDAQ. Full disclosure, I am an executive at Prairie and am deeply conflicted, but conflicts of interest don't bother me. It shows me where the allegiances are. But nevertheless, do your own research before buying any stock, including Prairie. Consult your financial advisor. Past performance does not guarantee future results. We'll be right back.
Lou Basenese with me for the hour. A small number of private jobs reported. A weak jobs report expected tomorrow. Does this set the stage maybe for lower interest rates? The Fed cutting rates? No?
Maybe. And I'm not there yet. One data point is not enough to sway, and I think everyone's anticipating or looking for a reason to cut rates. Next week, we also get inflation, and I think you have a seesaw for the Fed. You have inflation on one end and the labor market on the other, and if you see inflation going up, without, and the labor market going down, they're going to be in a pickle. They don't know what to do. You can't cut into that environment. So I think even if we get one bad jobs report like we did last year in October, you got to wait for the next one. So it's probably a July is the best case scenario, but maybe it pulls it forward a month before expectations for September cut. But I'm still in the camp. We're not getting one before September.
All right. Data centers. We dealt with this just the other day.
Yeah.
Data centers account for 1% of GDP.
Yeah.
Okay, that is huge.
Think about that. 1% of GDP in Q1. It's never been that high since the dot-com day. And I would say this, there was a lot of hype and bluster going on then. AI is still in the very early innings. That contribution back in the dot-com days was right at the peak. You're going to see a meaningful contribution in Q2, Q3, Q4, and into 2026 based alone on predictions of spending from Mag 7 stocks. So
spending on data centers,
spending on
is
data
stimulative for the whole economy.
To the economy, and this is one factor that tailwind for the economy that no one's been talking about. We've been talking about tax cuts in the back half of the year. I think this is the unexpected accelerant to the U.S. economy, and is all the reason more why we need to get this bill passed so that we can get on with growing again. The rest of the world is struggling to grow. China, the Eurozone. The U.S. is really in a great prime opportunity to continue booming.
Welcome back to The Big Skinny with Lou Basenese. Just had a great interview with Shay. Ran a little bit over, but that's what we do here. When we got good guests with good insights, we're going to keep the conversation going. Speaking of which, join the conversation on X, on LinkedIn, on YouTube. Got some great questions, comments here from several of you. Keep them coming. It keeps things interesting, both for us and for everyone else. By the way, today I did get my first email from Futurum. Best stuff. I got it too about Apple's Worldwide Developer Conference. I suggest everyone go and sign up. As Shay said, it's a free resource. Daniel Newman, who we had on last week, runs the Futurum group, is kind of the brains behind that whole operation and has tremendous insights as he shared. If you didn't see last week's episode, go back, listen to it, because he shares the deep intelligence he has from working with all these tech companies, the executives, and he's actually got a great rock star story about Nvidia and how he got singled out by the CEO. So I don't have it, which Dodd made me acutely aware of, and we'll talk about that in the Dodd block. But before we get there, we're going to run right to it, get to the high five. But first, I want to share two more stocks that are in our top 10 AI stocks not named Nvidia. And, no surprise, Shay and I talked about Astera Labs. So obviously, this is the interconnectivity to AI. We talked about it. These are the critical functioning chips that help the data center chips, the GPUs, and all other components communicate with each other. Again, this is a company that is new on the markets, just a little bit over a year, publicly traded, is trading for about $90 a share right now, has run as high as 150. So I think at the very least, you've got a 50%-ish upside embedded in the stock, a great opportunistic trade. Momentum on its side. You're seeing a lot of momentum come back into these AI names. And this is one of the newer stocks that hasn't had the time to accumulate all the institutional ownership, is still trading at a really compelling market cap. And here we have, this is another opportunity that's in the list, their third stock. I'm going to give you our fourth stock quickly before we bring in Dodd for the Dodd block. The fourth stock is a company that I've talked about for over a year. The stock's up over 200% in that time and still has plenty of room to run. This is Innodata. Now, Innodata is basically the AI inside all the Mag 7 AI. In fact, they talk about the fact that they are currently doing business with 5 of the Mag 7. They just added 4 other big tech companies. They call what they do, they've been around for over 30 years. They're really in a data analytics, procurement, analysis company. They've now pivoted, obviously, with the advent of AI, this huge opportunity to call themselves data engineers. So they are helping feed and train AI models. They're working with the biggest of the bigs. So instead of, this is why I love Innodata, especially it's strong momentum in the business, in the share price, revenue up 120% in the last quarter. But it also lets you play growth in AI without having to pick one of the Mag 7. You can get all of them embedded in one. So the better that any of them do, you don't have to pick the winner in the race. You can bet on all the horses in the race and win no matter how they do. So Innodata, INOD is the ticker on that one. A great AI stock. We're going to be rounding out the list in the coming days and finish it up in next week's episode. Be sure to tune in. That's top 10 stocks not named in top 10 AI stocks, not named Nvidia. Scan the QR code on your screen. Make sure you're on our list to make sure you receive those other tickers and explanations behind all of those companies. With that being said, we got about 7-8 minutes left. Let's bring in my friend, fellow investor, compatriot, loyalist, the Dodd man.
Man, take a breath. I mean, you've been running it today. Traveling for a conference, doing appearances, not eating, and working on our show again in the Uber. Good times.
Yeah, I know. You know me better than anyone, and you and my wife are well aware. Yeah, today's been a marathon of a day. Started off with a Fox Business podcast interview at a conference. Ran downtown Chicago for 40 minutes to do an interview. Came back, and I'm whining. I'm gonna stop whining. It's just been nonstop. No one gives a crap about that. So we'll leave it there. But what they do care about, man, is some of these things happening in the market. I think we got a few headlines to run through. Our traditional high five. Can we talk to the high five? High five for getting through the day. That animation you made, that high five is like my 1-year-old high fiving. Yay!
I always love reading these headlines and kind of figuring out what's coming next. So budget BS. I'm assuming you got my expense report and have some questions.
I did, yeah. Budget. What's a budget, my friend? Apparently, that's what you think. We got no budgets here. No, budget BS. Look, there's all this debate over whether the big, beautiful bill is a big, beautiful bill or whether it's an abomination. Could it be big and not beautiful? It has to be skinny. Here's what I know. The CBO is the government office that comes out and makes estimates of like, hey, what's this budget going to do to the deficit? Once again, we see this chart where there's a dark line, and that's actually what's happened, the actual deficit based upon various budget passes. And then these squiggly lines are all the estimates from the CBO. And lo and behold, they're always too conservative, saying it's not going to change the deficit. It's not going to make it worse. And, to Shai's point, I'll give him credit. And Musk knows this, is like Washington has inertia that moves it into deficit spending deeper and deeper. And it's going to be really hard to break out of that. So, don't believe all the estimates.
All right.
It's budget BS otherwise.
Yeah. Hard realities. Shay was so straight on to AI and so and it's so huge. I'm assuming AI has the hard reality here is AI is taking that fall internship away from me, isn't it?
Yeah, it is, man. Shay, I'm sorry to tell you, he's been promoted. Nah, get out of here, dude. We go back. Us oldies got to stick together, man. You're a little bit older than me. We got to.
That guy was smart, young and smart. Makes me sick.
I'm telling you, the level of just depth of understanding and some of his stuff that I read is it's impressive. I mean, I have no shame in my game to admit when someone is very accomplished, ambitious, knows their stuff, and he is one of them. There's few and far between that are out there. Daniel Newman, who's now his partner in that business. We had him on last week. He's another guy that I would put up there. But no, hard realities. Remember, we've been having these conversations between soft and hard data, not some Viagra commercial, but the actual economic data. And all the soft data has been coming in really weak, but none of the hard economic data, the actual data, has actually come along in the same way. And this is a great chart that comes out of Goldman, I believe. Yeah, it's Goldman Sachs showing that most times the market and the soft data collapses before any of the hard data comes in to show any reason to be worried. And the key here is that basically the market is a forward-looking beast, and it's already priced this in. So the fact that even if we get an inflation print later this week that is true hard data that's not good, or we start getting hard data in terms of retail spending and those things that's not positive, we're most likely still past the bottom in the market. So I think the economy is in much better shape than people anticipate or expect. But if we did get some worse economic data, I think the market's going to hang in there okay.
I'm just holding on for your small caps, man. I want small caps to come back.
You want nano caps to come back. Let's be honest.
Caps is more like
you're the guy that pushes your chips all in on the most speculative. So me too, but I get it.
First analysts, now economists. Walk into a bar. Sounds like a joke setup.
I'm not that funny. If you got a joke about economists and analysts, man, let it rip because I don't got one. No, this is about, look, analysts were dramatically off with their expectations. And then you remember maybe a month or two ago when the whole trade war erupted, you saw these headlines about the Atlanta Fed predicting the U.S. economy is going to contract massively in Q1. It's going to be a negative 2% GDP growth. Pull up the latest forecast from the Atlanta Fed, and they're coming back to their senses, realizing, oh, these tariffs aren't so bad. Follow the green line, right? Like they're now calling for a quarterly percent change that could peak 4.5%. That's insanity, right? Like negative 2% that's like a 6%, 6 full point swing. Just ignore them. Ignore them like the weathermen. In the Northeast, they say it's going to rain every weekend, and you can't trust the forecast until about 2 hours before.
All right. Mag 7's got legs.
Yeah.
There's got to be boy band something.
There's no boy band here, man.
With legs? I mean, come on.
Nah, it's the Christmas
How many
story,
legs? How many boy banders are in this one?
Nah, the lamp with legs, the Christmas story. Come on.
Oh, yeah.
The fishnet stocking one. That's a good one. We're dating ourselves. No, look, we talk about earnings drive stock prices. I don't want to get too far off and bash on the Mag 7. The reality is you got to have exposure to them, because if you look at their earnings growth starting in 2021 to 2025, I mean, we're still getting double-digit earnings growth, right? The good news is the unmagnificent 7, the unmagnificent 493 are going to double their earnings growth from last year to this year, roughly. So that's a good economic data point. Earnings data point for the market. If those other 493 companies are going to be growing earnings as well, should help drive the market higher. So all good news. Don't let the bears get you down. Don't get too many Kleenex out, because the Mag 7's breaking up like the boy band. They're still doing pretty well on an individual basis. All
right. All-time high phobia. No, we're not talking about your fear of managing your time well. That's for sure. So,
thank you, Daniel. He just went serving out. Listen, there is now the chance that we're going to get to new all-time highs in the market, which always makes people go, I shouldn't invest right now. Now's a bad time. It just hit a high. I'm gonna put money to work, and the market's going to roll off the cliff like the second after I do that. Here's something to assuage those fears. I don't know how to properly pronounce it today. My brain is fried. If you look at all-time highs, they tend to be, based on this analysis from Michael Zaccardi, they tend to actually be new bottoms put in for the market. So if you invest after all-time highs, you get really strong forward return. So don't think that if you buy high, it can't go higher still. History shows you that that's exactly what's happened with the S&P 500. So that's a wrap, my friend. We're one. What's that?
Said no, but you want to buy low, right?
Well, it ends up being low, but only in hindsight. So yeah, if we had a crystal ball, we wouldn't be doing this, my friend. That's for sure. We'd maybe be in Vegas at your favorite slot machine. So
no, craps.
Craps, that's right. Yeah, craps is my game. You always try and get me to go to the slots and all you can eat sushi. So I don't know.
It's my game too, but I got to wait for the small caps to come back so I can afford it again. That's why I'm at the slot machine.
You need small caps. Make small caps great again so Dodd can play craps again. All right, folks. If you got any final comments, parting words, fire them off now. But otherwise, we're signing off for a week. Check out this low-key stock, CRDO, with multiple hyperscaler customers. Interesting. Why do I know that ticker for some reason? Let me check it out. CRDO. See, this is what I love. We are crowdsourcing new ideas. Credo Technologies. Nope, it's not a company I was thinking of. I will check it out. We'll talk about it next week. Market cap, $12 billion market cap. Yeah, that's not a small, tiny company. So we'll definitely take a look at that, right in that mid-large top end of the range. Interesting. Love it. Thanks for the idea. And thank you, Dodd, Daniel, Taylor, and everyone tuning in. Shay, if you're still listening, thanks for joining us. We will be back from Brooklyn next week. Until then, I'm Lou Basenese with the Big Skinny signing off, and that's Dodd, man.